Hello everybody, welcome back to the channel. I have an amazing video for you guys today. Anybody in the market of buying a house, you might want to wait because economists are now warning that we might see a 20% drop. How soon can that happen? Well, let's read this article, but check out this headline. This is coming from Fox Business, and it says U.S. home prices could plunge 20% amid risk of deep housing slide, Fed economist warns. U.S. Housing market faces affordability crunch, threat of a deep slide. So things might get good for anybody wanting to buy a house, but remember, with interest rates as high as they are, that is basically the trigger that's going to create this drop. So let's read a little bit. Um, the Economist says that pointing to signs of trouble detected in the US and German housing markets, that trends pose vulnerability to the global outlook because of the size of those nations. So that's a big deal. We might be one of the first dominoes to drop. Then it's going to basically have a worldwide panic, and that could definitely threaten the stock market. And when the stock market gets threatened, people have layoffs. Companies have layoffs, and then people can't pay their mortgage, and everything goes belly up. So check this out. The possibility of here, let me highlight. Sorry about that. The possibility of a domino effect where investors pull out of international housing, seeking safety and liquidity elsewhere, also raised concerns of spillovers beyond Germany or the U.S. to the global economy. There you go. Let me just keep reading. While the modest housing correction remains a baseline scenario, the risk that the tighter than expected monetary policy may trigger a more severe price correction in Germany and the US cannot be ignored. So during the COVID-19, as you guys know, we lowered the interest rates to basically like 3 to 4%, and now they're up to 7. So basically, it's more expensive to borrow money. And here, the interest rate sensitive housing market has so far borne the brunt of the tighter monetary policy. Although mortgage rates have fallen from its peak of 7.8 notch in November, they have recently reversed that trend and started to march higher amid interest rate hikes fears. The average rate for a 30-year mortgage climbed to 6.5% this week. And remember, that remains significantly higher than just 1 year ago today, when rates hovered around 3.92%. So I feel like we still, right now, a lot of people are sitting in their homes and they don't want to sell because they have a great interest rate and they can make the payment. And they know that if they buy somewhere else, things are really expensive right now. I mean, if you think about how much prices have jumped from 2019 to now, which seems like a bleep, people are like not really willing to do that. Like personally, I'm not gonna do that. I rather just save up, wait for it to crash and buy something else. I definitely do not want to give up my house and my low interest rate. So check this out. Let me just finish reading this paragraph. It says, still, even the higher mortgage rates putting homeownership out of reach for millions of Americans, many home prices are still more expensive than they were 1 year ago. In December, the total value of U.S. houses was still up 6.5% from the same time a year ago. And we're going into summer, guys, so you know prices are going to start going up. It's just the trend. The housing market always booms in the summer months because it is when people like to try, when people have the time to move, to search, and neighborhoods just look better and people are just in a better mood. So prices are going to go up. Let's jump real quick into the Redfin weekly housing market data. So we have 2023 right here is the blue line. As you can see, there's just less listings being put out there, which is creating a supply crunch, which is keeping those prices elevated. Now, if we just go to the median sale price, look, we are literally at the same rate as we were last year, with basically very low interest rates around this time. Interest rates started creeping up like basically in the middle of the year. They really started taking effect, as you can see this drop. But look at this. We're going to go into summer, and I believe I don't think we're going to see the peak. This is going to be a great curve to see if we stay under that 2022 level right here, the black line, or if we go higher. I'm thinking we're going to go lower. I thought we were going to be like way down to this 2021 level, and unfortunately hasn't happened yet. But the best would be to go back to 2019 levels. But I don't think that's going to happen. We have high inflation, more people are employed, more people are making money, and more people are taking more risk. And people are definitely feeling the benefits of those low interest rates. And a lot of businesses did really well in the last 2 years. And when businesses do well, they end up paying their employees a little bit better, and that's sort of what we're seeing. So this might be the new normal, unfortunately, thanks to inflation, and we got to start thinking about paying the national debt off, which is could be one of the catalysts that basically brings everything down. If the Congress does not pass the budget resolution, we could see the United States default, and that means that our credit score will, drop, and we will have to pay higher interest rates on the money that we owe. And that could totally trigger the U.S. because then the U.S. recession, because then that could trigger, basically that will come to us, right? We essentially are the owners of this debt, right? So the taxpayers' responsibility will be, to pay it off, and it'll be just harder on us, and it could definitely create, it could wreak havoc across our economy, and who knows what will happen. So I think Congress is going to pass it. It would be the best solution, but I could see the Republicans also want to, fight a little bit here, try to get their message to be heard about having to, cut spending. That's really what they want to do. Democrats, I feel like they want to fix the problem by, raising taxes. I believe, unfortunately, with the amount of money that we owe, the amount of money that we have printed, I believe probably the best solution would be a combination of raising taxes and cutting spending. And that is just going to be like, nobody wants to hear that, right? That at the end of the day, it's like, think about it like this. Like, think about, like, you're a really fat person, and you go to the doctor, and basically the doctor is like telling you, okay, you have to diet and, like, basically cut everything out. Not only do you have to eat less, but you have to change the types of foods that you eat, right? And then on top of that, you have to exercise. So, it's like, you can't exercise your way out of, out of it, and you can't, you could diet and lose the weight, but but at the end of the day, like, it's going to be a combination of everything, right? So regardless of how it looks, it sort of sucks. But you know what? We would probably be better off in the long run. And that's the problem, that I feel like us Americans, we're so used to instant gratification. So what ends up happening is, you want, like, the results now. Like, you want the boat now. You want the jet ski now. You want the vacation now. And we're not thinking long term. So, like, right now, what we need, right, will be probably lower taxes, because we're not thinking like where the country's going to be in 100 years, because a lot of us probably just say we're not going to be here in 100 years, so who cares? Like, I want to go on that long vacation. I want to do this or that, whatever. And I think that's essentially a little bit of the problem here, is that nobody wants to go through the hard times right now. They don't have to, but hard times are coming regardless. It could be better if we tighten up right now, but if we let it crash, that's when we see panic, and then that's when we see a lot of disruption. So hopefully it's a soft landing, hopefully, but we can only, we'll see how it all breaks down. I mean, God forbid we get another, like, virus or something, which would, I don't even want to think about that. Okay, guys, so I'm going to go ahead and finish this video. Thank you guys so much for watching. If you like my commentary, if you enjoy these videos, if you have fun listening to what I have to say, please don't forget to smash that subscribe button. Turn your notifications on, your bell. And this is a lot of fun. Thank you guys for watching. I love you guys, and I'll see you on the next video.